All right, everyone. Today we're back on Friday. So happy Friday, everyone. We're going to discuss a little bit about what I've been doing this past 2 days, I believe, Thursday and Friday. So last we spoke, I think it was uh, before, it was the night of Wednesday, I believe. So it recorded before Thursday. There at that time, I had held PayPal, and I believe I had been able to reduce my cost basis to $64. Um, so effectively, let's take a look at it just because I tend to forget a little bit about what happened. Let's go into it. So we could see that quite a bit of activity. Don't know if I want to. Okay, so here we are. I had the buy at 65.02, right? And then I had sold contracts against it in the money for $64 strike price for 140. I had bought it back. So this is something I had previously covered. I bought it back for 40 cents. So essentially I lowered my cost basis down to $1. I mean, down $1 to $64. Then what I did was I sold it for 16 cents to be able to capture, I think it was the $200 roughly. However, I did end up buying it back at 12 cents. So I only netted 4 cents times 12 contracts. What's that, like $50? Yeah. So that's like a $50 gain or cost basis reduction. So 4 cent costs, or how many cents? 4 cents cost reduction. I'm still at $64 at that point. What did I do though? I sold out at 63.39 and then I bought back in at 62.87. So this was when on Thursday things were starting to dip already. On Wednesday things had gone up considerably and things started to dip quite a bit afterwards. So I was able to purchase it back for about let's take a look at how much that is lower, about 50 cents lower roughly, which is good. So if I had plans to, at the time I had plans to hold it a little bit longer, so I was able to reduce my cost basis. But then effectively I ended up, what did I do? I sold some of these contracts and then I bought them back. It was a little bit cheaper, but effectively you could just consider this as a no, a void transaction. Don't even worry about this, these calls that were sold and bought. Effectively, I did end up losing another 30 cents here, right? So did end up losing a 30 cents on this trade. And by selling it here, I ended up losing how much? Like 60 cents. So 30 cents plus 60 cents, that's 90 cents. 90 cents is quite a bit when you have 1,200 shares. So how much was that? Let's go ahead and just bust that out. So 12 times 90, right? A little bit over a grand loss. Now, why did I end up selling out? The reason is that SOFI, one thing I had mentioned was by Friday, very likely SOFI would have been pushed down below $7. The reason I believe that is because generally, once again, market makers don't want to have to pay out people who had bought in all these contracts, all these calls options, and so in effect, it's cheaper just to kind of short it a little bit, perhaps, and then be able to kind of not have to pay those out. So what ended up happening is I did buy into SOFI. Let's go back. So you can see I'm actually quite a bit down. So today was a pretty heavy day, and I'll talk about what happened. So let's look at SOFI. So yesterday, let's look at the history once more. And I got to say, this is so nice to just have the history here because sometimes it's difficult to remember the trades you make. So this just makes it really nice. All right, let's talk about this now. So on the 13th, what happened? I ended up buying. Remember, I was able to sell my position for about, I forget how much appreciation it was. I want to say 10 cents, but I had a little bit over $1,300 gain that I was able to capture. And this time I was able to buy back in at $7. So it had dipped at 7. You know, I don't want to miss because I feel like SoFi is a pretty solid pick, especially around $7. I feel very comfortable with it. I'll make a video on why that is. But here at $7, I went ahead and repurchased my shares. I sold contracts for 7 cents. So I effectively could lower my cost basis down to 7 cents or 7 cents lower than $7, which is $6.93. But I ended up buying it back this morning at a cent. So the reason being is because I thought I would be able to this morning there was a little bit of a drop, quite a significant drop actually. So I was able to buy back my contracts cheaper, and then I thought I would rent them out again. That being said, it kept dropping, and I think at the moment it's not a advantageous position for me to start selling my contracts. I'd rather just wait for it to, ideally for it to rebound, and then I'd be able to capture more premium. So what happened again? So I sold these 7 for 7 cents, and I bought it back for 1 cent. That means I effectively lowered my cost basis by 6 cents. So I'm at about 6.94. But as you can see, even though I'm at around 6.94 cost basis, the stock price went as low as I think it was like 6.40 today. So went down pretty considerably today. Let's take a look at its values. So yeah, so the lowest in the whole year was 6.41, and today the lowest it got to was 6.43. So it's 2 cents away from its all-time low, or yearly low. I apologize, not year all-time low, but yearly low. You can see it opened already down, right? So it had gone down somewhat, and it continued to go down throughout the day. Had a little bit of a rebound. One nice thing that I like about, I never noticed this really about Robinhood, is that if you click somewhere on here, I don't know. I know typically it works on the app, so this is on the desktop, so maybe it works a little bit differently. Maybe it's the advanced. Yeah, okay. So if you look at the advanced lines, I don't really do technical analysis. For the most part, that it doesn't really matter to me, the short-term price movement. Yes, I'm able to kind of profit off of it sometimes, but it's more so, I know in the long term, its EPS is improving. It's pretty much has guidance for kind of increasing its EPS to, right now it's 0.08, and I think they have it anywhere from from 60 cents to 80 cents in 2026. So it's going to significantly grow. The CEO always kind of sandbags their quarterly earnings. And so I have high confidence with SOFI and especially a CEO. So I think it's a solid company, and especially given the fact that it's only seen price depreciation, though, even though it's gotten better and better over time, it just gives me full confidence that I'm just buying it at a better price, buying it at a better price. Now that's just, so that's why I don't really look at the lines, whether it's momentum lines or whether it's going down, or, I tend not to worry about that. What I do worry about is the market overall, because the market is increased steadily. It's at all-time high, right? So that's the one thing that concerns me, because it's always easy to go into a correction, and then small caps can be affected pretty significantly. But that being said, why do I even mention the charts this time? Because like I said, I'm not really a fan. The reason being is because one helpful metric is what's called the RSI. RSI is a way to kind of determine if it's kind of in the oversold territories, if it's overvalued, right? For essentially, it's kind of like a momentum indicator. So if we take a look at it for the past month, we can see that it's at an RSI of what, like under 30, right? Under 30. Generally 40 to 70 is where it should be. That's somewhere in the middle. If it's above 70, it's overvalued, or for the moment, it's considered overvalued. And in terms of momentum, if it's under 30, it tends to be considered, tends to be overvalued. I mean, undervalued. Today, it reached a point where it was at like 14, so it was heavily oversold. And then it started to come back. We take a look at it on a weekly basis. Yep. So it was quite significantly oversold, and right now it's kind of coming back. So right now it's coming back. This leads me to believe that within the short term, it can go back to around like a 660, 670 cents. I just need it to be around here, like 670 ideally, so that I can rent out or sell calls again at $7 strike price and get a kind of decent weekly premium, and then continue to lower my cost basis, and then eventually when I get bought out, when it's past 7, then I'll be profitable right there. So that's why I'm not really worried, even though it is a little bit of a bummer to be at the 650 mark. That's okay. The way I've protected myself is by, once again, selling covered calls. It's helped me put me in a good position. Now, the one thing I would say is, even though I have been protecting myself in that manner, I also sell covered calls because I leverage myself by buying on margin as well. So you can see here, I still have a okay buffer, still have an okay buffer. But that being said, I do want to, I do hope that next week has a small little rebound, so then I can sell weeklies on it. It's okay if I miss a huge run up. What's not ideal is if I'm margined out and I suddenly it falls like another dollar or so. I think it's unlikely. That being said, anything's possible within the market. Market can be very irrational. So, but I think given kind of the amount of evidence that's out there, like I said, the positive EPS for the last 2 quarters. So the fact that it went from negative EPS to positive EPS this past year, it's great guidance. It's the fact that it's increasing the amount of what's called um, amount in their checkings per user, the increase in user growth and so forth. All of this is trending towards kind of really positive news for SoFi. So I understand from like a price action standpoint, very frustrating for many people who are in the company, but from a fundamental standpoint, it's a pretty solid company. So that's why I like to, in my own opinion, it's pretty solid. So that's why I'm in it, and I'm not really concerned. What I would have been concerned is if I had held it, like if I had been an owner when it was $9. I thought it was a little bit too high when it was $9 and it dropped down to about like 7.30. That would have been really concerning, and especially to have held it onto to this point at the moment, you're down maybe like 30% or so, especially if you didn't sell any calls as protection. That would be very unfortunate. But because I'm not in that position, I'm still profitable for the year, right? So that's still nice, even though it looks like, like I said yesterday, I was at 40. What was I? Let's take a look at it. Was that drop like, yeah, so I was closer to 44, and then now I'm to 37. That's okay. I don't mind that swing. It's going to go back to 7, and if not, I'll be able to reduce my cost basis such that eventually 650 will be my cost basis if it stays depressed. Not in terms of mood, but price action, of course. So that's what I'm doing at the moment. Like I said, I'm just hoping for a little bit of a rebound so I can sell those calls. And if not, if it doesn't do it by probably Wednesday, then I'll go ahead and just start selling just to be able to capture some premium. But I hope that helped a little bit of what I was doing and what was going on. Definitely looking back at it, the SoFi or getting into PayPal, even though it's still okay. Like I said, I don't really believe in it long term. I just believe in it in the sense that it's doing well enough that I felt comfortable kind of leaving my money in it for a little bit, even though I went down like about a K in it. So the only thing I would have probably changed from my strategy is I probably would have sat on cash instead of going into PayPal and then transitioning into SoFi dropping. I had pretty confident that it was going to drop by Friday. What I didn't anticipate in SoFi, and this is something I forgot to address, was what's that? Oh, there we go. So what happened recently? So we know that the CEO has been buying. He's always been buying a little bit, but that's very little, right? So it's only like 200,000. Whereas recently, a major stakeholder had actually sold out all of their shares. They sold out about 2% of their ownership of the company, which works out to be about $134 million worth of shares. And that's the reason that we had such a drop, or that's part of the reason why we had such a drop. So generally there was a small drop overall in the market that brings SoFi down, but also it was because of the fact that we had an insider selling. Now that there's some speculation that that's because the board member might not have been promised like a seat in the future. Maybe he was going to get kind of excused from his position, to say it nicely. And as a result, they felt that they should, sell their shares or position in the company. So that makes sense, and that makes sense why retail would, or that makes sense why the price could go down and retail would follow and start selling shares, of course. So it's a very, very normal reaction. Nothing really concerning. It would be concerning if, say, for example, like Anthony Noto, the CEO, started selling. That's that's kind of concerning. But the fact that he hasn't sold, but he's bought like little pieces, okay, that's all right. So I hope that makes sense. I hope that you enjoyed this video. Please let me know if you if you enjoyed it. If you did, like, share, and subscribe. I'm hoping to make more videos consistently. And then additionally, this weekend, I'll be making some videos on options, because I did get it requested how to just general call options and put options. So I'm going to make some videos on those. It's not financial advice. Once again, it's just my own knowledge, my own self learned knowledge through the website, through Google, right, through YouTube and so forth, and through other YouTube videos. So there's other creators out there, just one, and just taking a stab at kind of being able to explain it myself. And as you can tell, this is not scripted whatsoever. in the sense that I'll have ideas kind of listed out, but I don't edit these videos. So that way my reaction is always genuine, and I hope to be transparent in terms of the actions that I perform in terms of my portfolio. So thank you so much and have a great day.